If anybody's back on here, if I could get a mic check, that'd probably help. I think I should be ready to roll now. If anybody in the YouTube, oh, we're good. All right, all right. Sorry, guys. I mean, I was off to an electric start too. I mean, I was going. There were so many good points made, but the mic wasn't working. I'm glad I looked down as soon as I did, but um, had to switch computers here, which gives me. I mean, how does this look terrible to you guys? Maybe I can kind of try to adjust this chart. Hopefully, you can see it a little bit. One second. We'll let everyone try to get back in here. You guys know I'm always good for technical difficulties. I'm always good for a few technical difficulties per week. All right, this will get the point home. I hope you guys can see the chart a little bit at least. Not as good of quality as I would have had, but I think this will work. Get rolling here in a second. Was touching on a few TA concepts. I kind of wanted to clearly explain what I'm looking for, what boxes I need to be checked for something to be considered, an A plus high probability daily setup. And so I wanted to clearly go over, exactly what I'm looking for in those, share a few, thoughts and comments on the broader market. I hope everyone had a, decent day. Wasn't a very opportune day in my opinion. I feel like there was like really two trades today, right? It was, there was some downside to trade off of open, but for the most part, I feel like today was pretty uneventful. You basically had to be long before the FOMC 2 o'clock Eastern rates decision. If you were long before that, you got paid pretty well if you took profits. And then there was that dive into close that you could have shorted. But outside of that, there just wasn't, a ton of moves today. For the most part, I know we had a lot of range and there were some great downside opportunities, but in terms of upside, there just wasn't much on the board today. I managed to have a nice DraftKings entry, so I made a little bit of money there. DPZ is one I've been talking about every day. That's a stock that was one of the best performers in the market really right now. Made a little bit of money there. I mean, a decent chunk of money there. And then Meta and Beyond were my two losing trades. BYND was just a bad entry. It was a starter. It was a feeler position, but obviously did not pan out. Was a poor entry by me. And so I think today was mostly for me sitting back observing and taking the time tonight to look through daily charts and really get confident and get a game plan set up for tomorrow. And so I think Mans might have tweeted this link. One second. All right, I got that tweeted out. Sorry, I didn't mean to take up a large chunk of your guys' evening. Just give it a minute here for everyone to stroll in. Then I'll do, get through what I wanted to cover tonight and kind of some thoughts into tomorrow. Probably take about 15 minutes. Get rolling here in about 30 seconds. And then we can cover a few things and see what we get the rest of the week. But just one second here. I'm going to get a drink of water and then I'll get rolling on what I'm seeing with the SPY daily chart. All right, so this is kind of take two of what I was going through earlier. I really wanted to clearly explain the boxes that I want checked on a daily chart for it to be considered an A plus setup. Really, in either direction. I think it's funny that I sent LD the topics that I wanted to cover on each weekly stream. This week's, I believe, was D-Book's favorite daily setups. And I was anticipating some nice upside charts, but I think it's ironic that we actually have, in my opinion, pretty much an A plus downside daily chart example. And so apologies again if the quality's a little poor streaming off the laptop for the first time. But what I'm seeing with the SPY daily chart, this was a super notable candle. There's massive volume. This was our CPI day candle. If you guys remember that day, we opened around 348, literally rallied $20 intraday on super massive volume. And this SPY CPI daily candle, and I totally encourage you guys to have your own SPY daily chart up when I'm talking about this, because you're definitely probably more comfortable with looking at your own charting setup. So probably makes it easier to follow along. But that CPI data day, which was Thursday, October 13th, we saw massive volume. And that was the kind of start of this nice uptrend that we saw in SPY, which was almost a $42 rip, right? On the SPY chart. And so that was, kind of a massive move off of bottom when you're talking $42 on something like SPY. And the reason I think I was kind of sticking with this trend and sticking to my bullish bias, and you can't quite see this volume candle, but it's like up to here. Throughout this uptrend for SPY, there was never any heavy selling pressure candles that were really ugly. And on this day, there was, that day following CPI, there was definitely a heavy volume day that resulted in selling. But at the end of the day, that candle closed $10 above the previous day's lows, and it was slightly relatively less volume. And so whenever I see this CPI candle, I'm going to ride that trend until the wheels fall off. And there was never, if you look at, and I'm sorry if the visual example is not the prettiest, if you guys look at kind of this volume right here, you'll notice there was never any red days where it looked like big money was getting out. There was never any red days where selling pressure was super high relative to what took this pattern up, which was this day. And you guys can probably see how massive this volume candle is if you're looking at your own SPY daily chart. But today changed things for me. And I feel like if you guys have paid attention to kind of the way I approach daily charts, you saw the same thing. And basically what we have today out of today's SPY daily candle is a close at lows or near lows. So there's no lower wick present on this SPY daily candle. It was a heavy volume selling day that closed, at lows or near lows. And so if you just flip this around on its head, that's going to be my criteria for an A plus bull upside setup. If you just flip this chart, I can actually do that right now. Option I. If you option I, look if you inverse this SPY chart. If you guys pay attention to what I like to trade, I'm buying calls on this because this is a nice volume increase, highest volume we've seen in a couple weeks here, and there's a volume gap overhead. And so let me turn this back around. Doesn't that look pretty bullish if you flip it upside down, the SPY daily? Looks awesome. I would buy calls on this setup 10 times out of 10. To flip it back down, I guess to reiterate the point I'm trying to get across is that this to me is an A plus downside daily chart because what are the three boxes that I need checked? I need a close at or near lows or highs. I know this is a bearish example, but if you just literally think backwards on all of this, it's the exact same concepts. So a close at or near lows, or highs if it's an upside setup. Increased daily volume. This is the highest daily volume that we've seen in 2+ weeks. Back to here. And so that checks my second box, which is, high relative volume compared to what we've seen in the past few days to weeks. And then that third box is the volume profile gap. And you can see here that this 375 down to really 367 is the mark I have, maybe 368, maybe that 370 psych. But if this is a SPY chart that wants to confirm under this 375 spot, we've got a lot going for us, because we've got this daily candle, highest volume in several days to weeks, super high volume, a close at lows, and we've got this gap to work with. So to me, this fits the criteria that I have personally for a setup that I feel good about, something that's close to A plus, and something that I could maybe size full into is what I'm seeing on this SPY chart. And again, I know it's funny that there's a bearish example on my stream topic tonight, but if you flip this with option I upside down, and this might be something that I feel like maybe not all of you have done before, but if you're somebody who just is not good at trading downside, struggles to see things from a bearish perspective, I recommend inverse charting. And I think any trading software has this, but if you just flip this upside down, that's a very bullish setup. I would think that this would fill this gap up to 367. But you flip it upside down, we get that. And so I think that those three boxes are something that everybody, when looking over their charts at night, should be trying to check. I don't want a daily stock watch list that has a bunch of charts that have upper wicks, or in this case, if I'm looking downside, lower wicks. I think if you're patient enough and you are nimble enough until setups like this present themselves, I think that is the best way to grow your capital and grow your account and get some consistency going for yourself. Because off of these two, these are pretty neutral daily candles. If you zoom in here, this is another perfect example. If you look back, again, not sure how good this is showing in the stream. If you look back to this setup here, this daily candle close on Friday, October 21st on SPY, when I see this declining volume consolidation here, no real, like, we sold a little bit in terms of price, but nobody really sold. Nobody really sold if you look at the volume. And then we see today, on this day, a very, very clear relative increase in buying volume. And so when this candle closed on this Friday, I was feeling, very bullish. And I swung some calls over the weekend, and I was only looking long, and we were able to get some awesome upside trades off of this daily candle. And it's like, risk management still needs to be in play, but out of all the money that I've made over the past 2 years or 3 years as a full-time trader, a majority of it's probably come off of buying this candle. And you can talk about being perfect in buying bottoms and being the first one to a trade, but this one right here, this candle closed at 375 from 348, and being $25 off of bottom, I felt so confident in the market right here, just because of that relative increase in volume. We had a lot going for us here. It was a bull flag, a messy bull flag at that, but a bull flag trying to break out and leg up, and that's exactly what we saw, all the way up to 390. And so if you just kind of think backwards, again, thinking backwards, what do we see here? We had the highest volume in 1, 2, 3, 4, 5, 6 days right here, and a candle close at highs, and a volume gap, if you look, up to 390. So there was a gap here, candle close at highs, nice increase in volume. So this was a perfect upside setup. Then you think backwards, you see this candle that we saw today. You see a close near lows or at lows on the highest volume in 1, 2, 3, 4, 5, 6, 7 days. And so this, for me, I guess I hope I gave a decent explanation of what I'm looking at here. This, for me, all of those signals that I just mentioned make it a pretty, or at least a setup that I feel good about, and I'm willing to, maybe trade a little bit of size on. This candle, not so much. I thought that was pretty neutral, pretty indecisive. But then you see this close, and this is where I get a little bit excited, maybe to trade some puts into the end of the week. We'll see. But I think one more thing I wanted to note is the daily moving averages, just from a technical perspective. Sorry, this probably made it look crappy. If you guys look at the, and I know I'm not a huge indicator guy, but I do love the daily moving averages, the 20, 50, and 200 moving averages. I think that they're pretty useful and they're pretty important. These are kind of the moving averages that people say big money use, the banks use traditionally. Like these are the most like bare bones traditional moving averages that you could have on your daily chart: the 20, the 50, and the 200 MA. And I think another important point to make is you look at the 50-day moving average is where? Let's see. 381.31 is our 50 MA daily on SPY. And so we closed under that. And so I think that that's one more added layer of confluence that we see on SPY, is that today we lost the 50-day moving average, closed under it, and we have that 20-day moving average sitting at 372. And so let me turn those off for a second. Remember where our 20-day moving average was? Oops. If you guys remember where that 20-day moving average just was, it's sitting right here. And I'll color code this 372 spot for a second. Not that one, not that one. That 372 spot is their 20-day moving average, and that's one of the larger pivots I have. So I don't know. I love this window. If I'm going to get a good entry under sub 375 on SPY, I'm going to try to ride that down to at least, a minimum of 372. Then I'd probably be looking towards that 370 psych, and then I'd be looking to 368, 367. And so there's a beautiful window here. And I hope I did a decent job of explaining what I saw. I think that this is kind of a unique scenario where you can if we get this follow through sell candle tomorrow down to 367 on SPY, this is going to be such, like if you just cut it off here. Like if you look at SPY from this red line on, I think that this is shaping up to be one of the best like volume price analysis examples that I could give, because I mentioned how this candle closed to me, increased daily volume, closed near highs, volume gap above was in my opinion A plus to the upside, and now you get to see 1, 2, 3, 4, 5, 6, a week later, 6 days later, you get to see increased daily selling pressure, a close near lows, and a volume gap below. And so do we fill down to 370, sub 370? I have to lean towards yes right now, just based off of the price structure on the daily. We will see. I know this chart's maybe gotten a little messy now, and I'm maybe being a little finicky. I don't want to take too much of your guys' night. I hope everyone was able to stay safe this evening, or not this evening, sorry, today. I mean, stay safe in the market today, because it was kind of a disaster out there, right? We saw a huge pop up off of the FOMC data. Sorry, reading the YouTube comments. We saw that pop up off the FOMC data, a large dump. So in my opinion, there was a sick move. There was a large move to the downside that was awesome to trade, but I still think it was difficult. I think the last few days really have been difficult, and I think I see an edge for myself to the downside, sub 375 on SPY. So I don't think you'll see me being super bullish until we can reclaim 375. We also need, I talk a ton about in the chat, DXY, which is the US dollar index. We can't have that ripping. That ripped, it dumped and then ripped, which is, if you flip it, correlate that to the SPY, it's a very strong inverse correlation. So we can't have DXY ripping because SPY tends to dump when DXY rips. So pay attention to that. And we also can't have that 10-year bond yield ripping, to over 410, 4.20 plus percent. We can't have that. So I would watch for DXY and the 10-year bond yield to dump. I think if you see those two things dump and you see SPY trading somewhat nicely, I think it's time to get long. But with all that said, I think those both still remain at levels I'm not totally comfortable with, and I don't think the market's comfortable with those levels either. So we will see. Things don't look ideal. I'm definitely willing to short now. I know you guys ask all the time, and I feel like maybe a lot of new members are curious as to why I wasn't shorting the entire, into close the whole afternoon, why I wasn't short, why I wasn't trying to aggressively trade puts today with full-size positions, is because I hadn't seen this yet. I was waiting for this, guys. Like, I know trading, everyone looks at their charts differently, and I'm not denying that there was a clear breakdown, especially sub 380. I know Bill mentioned it in the chat. There's a 5-minute candle close sub 380 today that provided a super clean downside entry. And I'm not denying that. Like, I think that the downside into close was pretty easy. Like, I think I could have made some money on it, but I was waiting for this. I was waiting for the first daily candle to break from this formation here, have a pretty nasty candle close near lows on increased volume. This is what I was waiting for to get comfortable shorting. And I think I am now into tomorrow. Obviously, I missed a little bit of move, but if we can get that move down to 367 and we don't gap down, I'm going to make a lot of money. Like today, I didn't lose that much money. I was flat basically today. And that's just kind of I'm trying to articulate, I guess, the trading style that I have, that I feel like Mans has to a degree. And that's, on a day like today where I've explained this a million times. Like I'm never gonna be banking on that day one reversal. Today was day one. Today was day one of selling pressure, real selling pressure. And so do we get day two of this real selling pressure? And when I say real, I'm talking daily volume. This was day one of real selling pressure, and this is what I was waiting for. So now I'm comfortable in playing full size downside positions, maybe down to 367. And so we will see what we get. I mean, any setup can fail. I always make sure to kind of throw that in. Any setup can fail, but probability wise, we're gonna see 370 probability wise. I mean, sure, anything can happen in the market at any given moment. We can still snap up, and tomorrow could be the rally of the century. It could be. But I think, in my opinion, probability-wise, I'm supposed to be leaning bullish off of this daily candle. And so I hope kind of this long, drawn-out explanation has kind of given a window into my thoughts and kind of the way I approach things. I miss moves. I miss a lot of moves. I miss moves all the time. I mean, I've missed more moves than I've caught since I started trading by far. But that's just my style. Like I could have caught today's move, but it would have been, with pretty little warning. And so that's what I think everyone should just remind themselves of, is that you're not going to catch every single move. Like I said, I've missed way more moves than I've caught over the past couple of years day trading. So I would wait until your criteria or your system is met. Whatever chart pattern that you've traded a lot, whatever daily TA, weekly TA, hourly, 15-minute, even 5-minute, whatever pattern that I feel like that you feel like you have seen play out a lot of times, and you've watched and studied and traded a lot, and you feel like that's your edge, just wait. Just wait until that setup is showing its hand. And for me, my system is hitching my wagon to trends that are spurred by daily volume increases. And so I think we could get into a little bit of a downtrend here. And so I've sat on hands for most of the day today, and I'm feeling excited and confident about tomorrow because my setup is showing its hand. And so I just don't think it's realistic for everybody to show up every day and, be green 3-4 out of 5 days and trade all day, every day, and just be, the greatest trader ever, because this is a hard market and it changes. It can turn on a dime, and just like know your own limitations, I guess, is what I'm trying to get across, is that trading is hard. Not every trader is perfect. Anything can happen at any given moment, and being patient and truly waiting until your edge is presented and your setup is on the screen, and then executing that with confidence is going to do so much more for you in the long run, I think, mentally and for your account. If you're able to be patient, wait for your setup. What's your setup? You have to have a setup. You have to develop your own little system or criteria. Feel free to use mine, but I think you need to have kind of one go-to look that you feel confident in, know you have an edge, and know you can attack, again, with confidence. So I think that's all I've got for tonight. I guess the last kind of thing I wanted to leave you guys with was that this is a hard game, and knowing your own limitations and being patient and waiting to use full size until your edge and your setup is given is so important, especially moving forward. So I will PBF. I like PBF. I still think that's a hold. Don't hate the idea of adding it either up here. I think all of the selling pressure. If you guys look at the PBF chart, I'll pull that up real quick before I pop off. You guys can see it right away. I hope you guys can see it right away. Literally, my only goal is for you guys to be able to see what's going on with this chart right when I bring it up. And I would look here first, because we've had 2 red days in the past 7. And what have those 2 red days been on? Nothing. We've got a very low volume sell day here, a very low volume sell day here, and the buy days have been much stronger in volume. So again, any setup can fail, but I think that big money still wants to take PBF up a little higher. Not a buy recommendation. It was just something we were discussing in terms of the energy sector and the Twitter space we were in. So, but that's my thoughts on that. We will see. We'll see what we get into the next 2 days. I'm never crazy aggressive to the downside, but I think we've got some nice setups to work with tomorrow. Again, if we rip, I'll probably just tail Mans, because he's probably going to be the best trader in that environment. So I'll probably just hitch onto his wagon. Have a few spots I would like to hit to the downside, but I don't want to take up everyone's whole night. I hope you guys kind of enjoyed the psychology, I guess, behind what I'm looking for and my overall approach to the market. So I'll see you guys in pre-market. We'll be on the morning call an hour before, 8:30 Eastern, 7:30 Central, 6:30 Pacific, or 5:30 Pacific, 6:30 Mountain Time, whatever time zone you guys are in. We'll be on the morning call in the morning, an hour before, and we'll see what we get the next 2 days, guys, because it's going to be, I think, pretty interesting. Could be the start of a new leg. We'll see. Peace.